Earlier today, we prepared bank reconciliation for exercise 8-11, but we ran out of time to prepare the journal entries. I did stress in the class that bank reconciliation is simply done either on a white piece of paper or Excel spreadsheet. However, if you were to open your books for a company, in particular your cash ledger, you will see the following cash balance. Cash balance per books is $7,284. However, your adjusted or correct cash balance that should appear on the balance sheet is this one, $7,972. How do you go from this balance down to this one? The only way to go from A to B is through the journal entries. That means all these events must be journalized in your journal. Okay, you should not touch the bank side. You cannot show up to the bank and say, hey, by the way, I would like to correct your books. Best case scenario, if you do have an error, you might call them and explain the situation, but you may not do anything with their cash balances. Okay. In essence, if you look at it, we have two events that happen. The first one was we collected the note receivable through the bank, and the second one we had bank fee charged. That is separate from the note. So we will record the first journal entry as a compound journal entry right here. Okay? If you logically think about it, we are taking cash and then we add a couple of items. Think of it as we add or debit cash. What did we do? We debited cash for the net amount $716. If I were you, I'd keep it blank for now. Just right, you know cash is gonna go up. This amount, I'm gonna put a tiny one up here. We collected a note receivable. If it is gone, it is collected, it must be credited. $700 gone, collected. Secondly, we collected interest revenue on that note right here. Interest revenue will go up or it will be credited. Third, the bank charged us collection fee for collecting the note. That's your separate expense. You can use either miscellaneous expense or you can write bank fees or bank fees expense. Something with the word expense to it will do it. And that the net amount, $716, was debited to cash. Cash went up by that much money. Okay. The second journal entry will be for bank service charge. I don't remember now. I think they printed some checks or did something extra for us. So that's your second journal entry. Very simple. We paid them cash in essence, so cash is credited and miscellaneous or bank charges should be debited for this $28. And you're done. So by doing these two journal entries, you will go from $7,284 on your books to $7,172 on your books, and that is correct adjusted balance that will appear on your balance sheet as your true cash balance. As we talked in class, looking at this existing bank reconciliation for exercise 8-12, we need to record the journal entries. Again, why the journal entry is necessary? Remember, the bank reconciliation is prepared either on a simple white piece of paper where you put in the numbers together to see if you can reconcile the bank statement to your books, or better yet, on the Excel spreadsheet. However, neither of those would change your books. So if I were to open the books right now, what cash balance will I see? I will see this number. However, the correct balance that must appear on your balance sheet as cash must be $19,489. So how do we go from here to here? That will take some adjusting journal entries. Again, you should not touch the bank side at all. You don't have the power to change those numbers, and most of them are simply due to time lag, and it will self-correct it eventually. Unless you have an error, then you're probably just going to want to give them a call. So your first journal entry that happened was the collection of note receivable. Right here, I'm going to put a 1. So we're going to start the first journal entry. And since we collected a note receivable, this account must be gone. Note receivable will be credited as your asset to wipe it off. We collected it. Interest revenue must be recorded too. By crediting it, you will increase your revenue. And cash must be debited for the sum of both. If you were to be charged by the bank a small fee, maybe $10, for providing such a service to you, in this case, you would have also right here debited miscellaneous expense for $10. But they're too nice to us, they don't charge us anything. Your second journal entry will be for earned interest on your checking account. So you have an interest-bearing checking account that will earn interest during the year. In this case, you will credit interest revenue and debit cash for $45. Third journal entry. This one is slightly harder, NSF check. Remember, I mentioned in class that we will never ever write bad checks. However, some of our customers might on accident write a check that will bounce. So maybe sometime, and I'm making up the date now, on September 15th, I received a check from Mr. Richard Nance, to collect his accounts receivable that was due to us. What did I do if I thought I collected the receivable? I must have debited cash for $425, and I must have credited accounts receivable. That's your normal journal entry to collect a receivable. Then I took that check to the bank, and unfortunately it was stamped NSF and returned to me. So bank was unable to increase my cash balance for $425 simply because there were no funds available. So what do I need to do? I have to reverse this journal entry, put the receivable back in the books as a receivable, and reduce my cash for $425 because I don't have the actual physical cash received. And receivables are back on the book. Books, you might need to type him a nice letter and include his NSF check and explain that the check bounced. So please remit a better payment. Now for the fourth journal entry will be for your safety deposit box rent. Very simple journal entry when you debit miscellaneous expense or bank expense for $65 and credit cash for $65. Now finally, once you got all these journal entries in the journal, and then they will be automatically, if you have an automated system, posted into the ledgers and follow through into the trial balance, your cash balance will be this. Okay, and just one point to ponder. See all these when they say add? You're adding balances to cash. And what are we doing? We debit cash, debits addition to cash. Now up here it says less in a NSF check in your safety deposit box. So this one is minus and this one is plus. So these two will end up with your credits to cash right here. Okay, that's it. There's not much to it.